Hello, it's Jason with mapsignals.com coming to you in June with the top 5 stocks to buy for June of 2021. So let's get right into it. But before we do, don't forget to do the whole like and subscribe thing if you like what you see. And don't forget to check out our top ETFs video, top growth stocks, and best dividend stocks to buy. So let's just get right to it. So here's what I did. I'm going to share my screen here. We went ahead and looked to find the top 5 stocks to buy. We went back in time and I looked at all of our Compass 20s, our MAP Top 20 report. So this report started in 2012. We would pick the top 20 stocks to buy and the bottom 10 to avoid. So I went through, and you're looking at a spreadsheet. It's ugly. We're not going to really get into it. I went through, I created this cool little pivot chart. It told me how many times each stock appeared on the top 20 report. And I just easily pulled out the top 5 for you. Eventually, you'll be able to do this at mapsignals.com. So here they are. Without further ado, Facebook, I'm sure you've heard of it. We got Align, Invisalign. They make those invisible braces. We got Fortinet. It's a cybersecurity company. Adobe, you probably know them as the old PDF readers, but they do a lot more, which we'll get into in just a moment, and NVIDIA. So what I would like to do is show you why these are the top 5 stocks. So look, these numbers right here. Facebook appeared 75 times on our top 20 report since 2012. That is monster. You're going to see what it looks like in just a moment. Invisalign 73 times, Fortinet and Adobe 62 times each, and NVIDIA 55. Don't forget, each time it comes on a top 20 report, it's being bought with big, unusual institutional volume and being pushed higher in price. So each time it comes on, it's at a higher price than it was before, usually. Not all the time, but usually. So let's go ahead really quickly, and we're going to look into each stock one at a time. But here, I want to show you why I like each stock from a fundamental point of view. So here, these are the metrics that I consider really important. Luke and I look at them all the time. 1-year sales and earnings growth, 3-year sales and earnings growth. We'd like to look at a profit margin, and we'd like to see if a company is really levered with a lot of debt. Because the more debt you have, that's fine to grow and expand. But when markets come under pressure and rates come into question, debt companies sensitive to debt, they fluctuate a lot more. So let's just look right here. Facebook, we got 1-year sales growth at 22%, 3-year sales growth 33%, 1-year earnings growth 57%, 3-year earnings growth 34%. I mean, those are magical numbers. If you were a business and you were posting that type of growth, you would be giddy as a CEO, especially if you made an 81% profit margin, keeping 81 cents of every dollar you make, and you're doing it with only 9% debt. Phenomenal. Facebook, great fundamentals. Just real quick back of the napkin stuff. Invisalign, 1-year sales growth, less impressive, 3%, but everyone was staying home. Maybe they're saying, I don't need to fix my teeth. That's going to change now with reopen, everybody getting out and about. 3-year sales growth, 24%, but 1-year earnings growth, 300%. 1-year earnings growth, 100%. Sorry, that's reversed. 1-year earnings growth, 300%. 3-year earnings growth, 100%. It's a lot of percents. All you need to know is they're going in the right direction. 72% profit margin, massive, very low debt, 3%. Fortinet, cybersecurity, cloud-based security, all that stuff, internet privacy, corporate security. 1-year sales growth, 20%, just about 19% for 3-year sales growth, 1-year earnings growth, 56%. It's almost broken record stuff. 260% 3-year earnings growth, 78% profit margin, and 6% debt to equity. Adobe, similar numbers. I'm not going to read through them all, but just massive numbers. 85% profit margin, low debt, 35%. NVIDIA, by the way, Adobe, they don't just do PDFs, they do Photoshop, Lightshop, and a bunch of subscription-based service, software as a service, very hot space, trades at a very high multiple. but they deserve it with growth metrics like this. NVIDIA, they make chips. Any of you have kids playing games, they probably want NVIDIA chips, you know, GOX or whatever they're called, in their computers because they can handle high frame rates and high definition video graphics. This is why cryptocurrency is so hot on NVIDIA, because they can handle a lot of churning, a lot of number crunching. So all those people mining for Bitcoins and stuff buy NVIDIA chips. Really hot space. I mean, this has been an all-star. I'm going to show you the chart in just 1 second. 62% profit margin, relatively low debt, manageable, certainly. So let's look at what these companies look like when you see unusual institutional buying. Let's skip over here to Facebook. You see, this is the last year, a lot of green, a little bit of red, nothing really to worry about. When you look at the chart since 2013, the stock appeared in the mid 40s for us. In our back test, went all the way up here. It's approaching 350. Talk about a stairway to heaven. Those are all those times that appeared on the Compass 20 right there. Look at that. Massive. That's what you want to do 75 times, like I told you. Stocks up 733% since the first time. I'll take it. I think that trend continues. Let's look at Invisalign. Again, we saw some buying this year. One little red spot. When a stock gets sold that has all the phenomenal fundamental and technical metrics that I just went over, you want to keep it. Look at the stairway to heaven again. Whoosh, huge. Had a couple of years where not much happened, then bam, all of a sudden off to the races. The stock's up 2,643%. It appeared 83 times ago, sometime in 2018. Not that, sorry, 2011. I couldn't read. Don't have my glasses on. Forgive me. Next stock up, Fortinet. A lot of buying this year, couple of red. Remember, red signals on great stocks could be a phenomenal buying opportunity. I wish I had bought it at around 108 because right now it's around $225 or so. Again, 86 times on our top 20 report, up 2,103% since 2010. In our back test over here, that gray area is back test, the white area is live. Boom. You know, that's what you want. I think that continues again. So just going to try and get a new tab here. Boom. Here we go. Adobe kind of flatlining through the year. We had a couple of opportunities to scoop it. When you see red on outlier stocks like these, you want to scoop them up. Why? You get that big stairway to heaven again. 95 signals since our back test picked it up in 1995. But again, you know, since just our live data a couple of years ago, around 2017, the stock's up fivefold. But since then, 5,000% since the first time picked up. Phenomenal. Last one is NVIDIA Corporation. Told you about the chips they make, video cards and all that stuff. Some buying, fell back, buying. We could have scooped it, sub 500, you know, maybe $480, $700 stock now. That stock is up 6,645%. Since 80 times ago, it appeared on that top 20 report way back when in 2000. Fine, let's just assume nothing happened. And then all of a sudden it started showing up again, 2014, 2015, boom, look at that stairway to heaven, that huge buying. So what do we have? We have huge institutional buying, unusual size, coupled with phenomenal sales growth, earnings growth, profit margins, and low debt. 5 powerhouse, phenomenal stocks that I would be buying right now. No personalized advice. I'm not telling you what to do. I'm just showcasing the 5 biggest outliers. Why are they the best stocks to buy in June? Because I went back to my top 20 report and I found the most commonly occurring ones since 2012. Those are the top 5 best stocks outliers for June of 2021. Once again, wrapping up. If you like what you see, don't forget to like and subscribe, and we will gladly be coming at you with more stuff in the future. And as always, questions, comments, don't hesitate to reach out. We want to make stuff better for you, so let us know. Thank you for your time. I will catch you again soon. Take care. Bye-bye.